The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Hi everyone, Basil Chapman. I was asked in the den if I would growl for Tom. Well, I'm not as good. He's got it down perfectly. He's had, what? How many times do you think that Tom has growled in the 14 or more years that he's had the show? I mean, what? You could try to work it out. You know, he has, it must be like 3,000, 4,000 times. He's got it down. Okay. So let's go to the numbers, folks. Basil Chapman sitting in for Tom O'Brien, one and only Tom O'Brien. Tom's on his way back from a business trip, so the flight, there was a chance that he might not have made it in time. I said, that's fine. I'm here. I'll do it. So instead of my usual show at 11 o'clock, I'm here an hour early, and it's a pleasure to be here. Let's run the numbers. You've got the Dow up 14 at 17,980. I should also say, hey, thank you to two great hours with John Logan and Larry Pesavento. Really important we get that start in the day. Just fabulous analysis. Now let's get to the numbers, and the numbers are: the Dow right now is up 15 at 17,940. It had an early morning spike. In fact, the futures, just to have a look at this, the futures, I don't understand where that optimism comes from under these circumstances, but the futures were up at one point at 2112. 2112. They're trading now at 2102, 10 points lower. And I've got an arch formation in the weekly chart of the futures, the E-minis, that's the S&P E-minis September contract, and that right arm extension had no technical veracity, which means that if, in fact, by Friday at 4 o'clock, this is a weekly chart, if Friday at 4 o'clock there's a close below the 200 period, the 9 period, the thick black line, a long time ago decided to make it thick because so many people had asked about it and were fascinated, and then started to use the 9 period exponential. And I use the exponential, not the simple, not the DMA or SMA. This is the EMA, the exponential, because it puts the weight on the last price, the closing price, and I think that's important. The way it's measured, I think, is very important for my work. And it says that in this particular instance, that 9-period moving average of 2093.90, let's call it 2094, is going to be very important. A close in the 2092 area or lower between now and tomorrow. It's just 10 points down, 11 points down. That would suggest that you're now under the 9-period exponential moving average for the second time since the top at 2126.25 the week of the 22nd of May. And I would consider that a big negative. All right, let's just make it easy. Within the context of the E-minis, you've got a potential peak C minus below that 2126 in the daily. You've got that peak E at the top. All you need to see is a move above 2130. And things change immediately. A move that holds. You can't just spike there once and then close much lower. That would be the Chapman wave, rogue wave. Unacceptable. That's just not what you want to see. Look at the 120-minute chart. Look at this 200-period exponential moving average. Isn't this a wonderful tool? Look at that. It was resistance, then it was support, then it was resistance, then it was support, and then it was... You didn't even notice it because we were so far away from it. And then all of a sudden, boop, at 2099 in the E-minis at 4 o'clock on the 24th, probably that was yesterday, huh? You hit that 200-period moving average in trough C, pop, it goes up, goes to a peak B, becomes a peak B minus. Why? Because you went to a lower low at 20.9825. These are called troughs on the way down with a lowercase notation, uppercase on the way up. So now you're sitting with that 2100, very important E-mini support. If that gets taken out, that's a big thing, because if you close under it for 2 out of 3 120-minute bars, the trend is decisively down. All right, let me move this 120-minute chart smaller so that you can see some other things. Here we go. We'll go with the numbers. The Dow, INDU, made an unusual peak G, very sharp pullback, that pink, that coral color, Cape Coral, that Cape Coral color right there, which is the 200-period exponential moving support has been taken out, and you're moving under it. And my suggestion here is just to be very careful. I'm going to make a suggestion both now and in my show, which I've done with my subscribers, I know it, that this is a period that you've got to be very cautious. There is enough evidence to say that leading indicators are just starting to show some deterioration. That's not to say that they have turned down and given sell modes or sell signals in the weekly charts at all, but daily charts in many indexes have given sell modes, which implies further move to the downside. I'm going to make this real easy, but first let me give you the numbers. The Dow, up 36 right now. That makes this area right in the middle of yesterday's candle. I'm talking about 18,050 is going to be really important. A close above that today, and then good news from Greece. I don't know what the good news could be, but let's just say it's interpreted as good news. You could have a sudden spike to the upside. But if there's any hesitation, if there's anything that says, wow, this is just not good, and is interpreted by the market as not good, my suggestion is be very careful. I would even recommend lightening up a little bit on your overall portfolios. You can always, look, if the market goes up sharply from here, you've taken off a little bit, you've got cash in hand for the next big pullback, and you're benefiting because the market's going higher if you have long positions. All right? I'm suggesting to raise a little cash is just not a bad thing right now. So as I see it, I'm looking at the technicals in the Dow being very weak, and weak in the sense that you've got a big price rise, but the technicals really aren't confirming. So as it stands right now, I'm going to give you the numbers. Holding above 18,050 into tomorrow at Friday at 4 o'clock, I'd say that that's really good action, considering what's happened. Not great action, but good action. Going even higher than that will be good action. But if there is a move down, and it is a very sudden move and takes the Dow below 17,900, that's just a very short-term cautionary warning to say, hey, watch out, because the weekly chart is starting to close below the 9-period moving average, that thick black line, and the technicals are weak. And the rally that we just saw this week, all those big pop-ups to the upside, are not being verified by the technicals. And that's what I'm saying. All right, let's go to the S&P. SPX.X, here we go. I have a couple of questions in the den, which I'll get to. And you've got the S&P up 4 at 2112. Same thing. There's this pattern that looks to me like an arch formation, like a lowercase h. And that's right there. I'm going to make it bigger. There's no reason why not. Let's go to that low right there. And it says if it turns around, you've got to watch that 2104 to 2100, because the moment you start trading in the 2090s again, that's going to deteriorate the weekly chart. Weekly chart, like the Dow, has made a peak E. I did not put a down arrow here just yet in the weekly chart, because you need to have a decent close. That close above the 9-period moving average last week was a bit of a positive sign. You need to see a decisive close below. And then look at the trend line. That trend line says a close below 2095 in the S&P cash would not be a good sign. Monthly charts in the Dow and the S&P are still very strong. I don't want to talk about them yet. There are divergences. Maybe later on or in my show I'll get to that. Let's just go to the QQQ right now, the QQQ series. See, the QQQ did make that extra pop yesterday for leg D. The leg D is very important, but if you can get above 111.16, it's at 110.52 right now, that would suggest that there's just enough strength in enough NASDAQ Index 100 stocks to elevate that QQQ trust series a little higher for a little longer. But I have a divergence here in the technicals of the weekly chart as well. The 86% in the stochastic of the daily is very good, but the MACD is not that great. It's good, but not great. And that suggests that there could be what I call a 5 to 6 bar reversal in the stochastic, because if it breaks under 80% by Monday, that would be suggesting that the QQQ series is going below 109.90. Nah, it'll go lower than that, 109.70, and be a very big negative. So far, it's kind of neutral. It's more positive than neutral in price, and let's just deal with that. And we're talking about 111.17 starting a new leg in the weekly chart. Aha. Let's go to the IWC. Now, that IWC is a fascinating index because the iShares Microcap ETF. It's been a spectacular move. There's the monthly. Here's the 120-minute chart, made a peak D and is pulling back from that peak D within an up channel. The dashed line of the weekly chart is starting to show that it's taking right there. Let me just draw this in a little bit clearer so you can see how trend lines work. It popped above the trend line, and that trend line says, I'm now important support at 83. The IWC, iShares Microcap ETF, is trading at 83.58, up 9 cents. Nice action above the 83.14 9-period moving average in the daily chart. Remember, daily chart, weekly chart, monthly chart, 120-minute chart. That's what we're looking at. And so far, the MACD is very good, flattening out, but very good. Stochastics really good at 91%, but quite a bit lower than it was. The on-balance volume of the blue line is turning down. Relative strength is turning down. We've got to watch this real closely. It's holding well. I'm just saying that a close below 82 by Monday or Tuesday would start to give signals to say that the IWC is now ready for a rest. Gold, I went through that earlier. Gold is down 60 cents, and bonds we'll talk about as soon as I get back. Basil Chapman sitting in for Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman sitting in for Tom O'Brien, and this is going to be an interesting hour and a half coming up, because you've had your early pop-up. Futures were up huge, up over 10 points, 11 points at one stage, and then started to subside. And now the futures are back up. They went to a minus. Now they're up 5, and the Dow is up 37. S&P is up 5. This is going to be a very interesting session for a couple of reasons. First of all, with the backdrop of Greece at this particular point, I would have expected that the market did not have the rallies. In fact, it was weak, and then you'd have sudden pop-ups on news, actual news, but we're not getting actual news that I can tell. So that means that there's enough internal strength with buyers coming in. So we'll look at certain aspects of that particular bias. My bias for my subscribers right now is to the downside. And we'll see what happens. But in the meantime, it's been working. So let's go to I want to go, first of all, to the NYA.X. That's the New York Stock Exchange, just to show that in the weekly chart, it's a little bit weaker than the other charts. In the monthly chart, it's still holding well, but it's not great action. It's kind of flat. Months and months, except for that very sharp move that was in, that was the October. If you had to exclude the October decline, basically that is really interesting. From June of last year, for a year, the New York Stock Exchange has been in a trading band. Interesting. So watching it closely, if the New York Stock Exchange, Larry did a great analysis of it in the previous show. I'll just say that in my work, it's at 11,082. A close below 11,000 would start that H pattern that I'm talking about, the lowercase h, in the daily chart, and the monthly chart would deteriorate considerably because it would be below the 9-period exponential moving average. So it needs a move above peak C, 11,170.82. That'll get to D, but that'll also improve the weekly a lot. So in the meantime, let's just go on to some of the other aspects that I want to look at. Let me show you something here. In gold is getting closer and closer to testing in that H pattern that I'm talking about, both in the daily, the weekly, the monthly. But the lower area, that candle, almost like a Chapman wave Roman candle, the low of 1.162 on the 5th of June. If gold starts to trade into the middle of that wick, in other words, at 1165, it's trading at 1172, not very far away. If it trades there, there's a real good chance that it's not only going to trade lower, but it's going to test the low. And that'll complete the H pattern, and then we'll see whether it stays below the left side low bar or goes further down to make the next H pattern in the weekly chart at 1143 the real test. And that implies that the 9-period moving average of 1180 is going to be really important in the gold contract on a short-term basis, because a close above it says, hey, wait a minute, you've been making higher highs. This is a higher low. It didn't go to that low of, was it June the 5th? I said, yep. And it's starting to move higher. Watch it closely, because you could start another M pattern and just keep going sideways. Look, the dollar is looking in the same pattern. the dollar in a larger term context has made the cup formation from the top at peak E that was made in February, was it? In March at 100.39, the dollar index, pulls all the way back. I should type that in. 139, what I just call it 139s right now, and pulls back to the 93s, I think it was. Yeah, 93.13. I'll put that in as well, 93.13. And it's had a good rally, a 50% rally, and then pull back again. But that lowercase h pattern with a W formation in the stochastic on the weekly chart, this is the weekly chart right here, says that if there is a rally and there's a strong rally above the 9-period exponential moving average without testing the 93.13 level, making this last move of 93.56, at least an intermediate term to short term low of significance, it would be a low of significance. That is, if in fact the dollar trades to 96.40s, because that would imply that it could retest the high of 97.78. This pattern that turns the H pattern into a cup formation is a potent pattern. We learned a long time ago for subscribers when we were trading when Sears changed its name to Sears Holdings. It created a pattern in the weekly chart just like this, and then it ran up to the top. And I learned from that pattern that the H pattern can become a cup pattern and very bullish, but you've got to be looking at the technicals, and the whole thing starts with the rudder, which is the daily shorter term chart, and that has to power through. I'm going to make this thicker so you can see exactly what I'm looking at, what a trend line can do. Here's the weight. I'm making it thick like that, and I'll change the color, make it pink. There you are. I'll be right back. Basil Chapman sitting here for Tom O'Brien, and I will be back straight after this.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, I'm back, and this, in fact, is the Tom O'Brien Money Masters, and I'm here to substitute today. And in fact, it's a great day to do it because we're going through all these numbers here. Chart you're looking at is PALL, P-A-L-L, had an email, and that was asking me, would you look at PALL, P-A-L-L, the ETF for Palladium on your show? Thanks, L, and the heading he has is Palladium getting a beating. Yeah, Palladium's getting a beating, you know. Oh, I did not look for, maybe in the break I'll do it. My commodity chart, I forgot the name of the index itself, a Reuters index. I'll find it. But all the commodities are getting hammered, and they're getting hammered because there's a deflationary period unfolding. And it's real simple, makes the dollar stronger, and the dollar, in fact, is putting pressure on gold and silver and palladium and high-grade copper and all these things. But there are other aspects as well, because there's a fashion that goes on in markets. Market goes through sectors. And if you're in the right sector, the tide going up will take almost all the boats to the upside. And if you're in the wrong sector, the tide going down pushes all the boats away. And you've got to be careful, because you can have the right stock in the wrong tide, which looks great for a moment, but the tide is going to be stronger in the end. So PAL is something I'm looking at, and I'm saying, hey, I would not touch this, even if there's a bounce at this particular point. The weekly chart says it's going to need a lot more basing at 65.40, down $1.86, having gapped down, to form even a kind of a base that gives you a short-term rally that can last 3 to 5 sessions rather than just a spike to the upside. Give it a chance, but I'll tell you what I would do. Today is Thursday. Ask me again Wednesday or Thursday of next week, because at that point we might be seeing a slight change in some of the, let's call them the inflationary products. And I'm a little surprised, because this does have other connotations economically, in the economy itself. So let's wait on that. Another question I had was if I would look at FNV. What is FNV? FNV. Looked at the chart before. Was it FNV? Yep, FNV, which is Franco-Nevada Corp. I don't ever look. Oh, I know I had looked at this some time ago. All right, let's just put it this way. The monthly chart is making these arch formations. The weekly chart is making these arch formations. The daily chart is, I've already drawn it, is making the arch formation. It's trading at 48.48, FNV, down 46 cents. I'd be careful with this. Yes, it's getting close to the 46.03 200 period exponential moving average, which coincides with the lower in March the 13th of 45.93, which coincides with the low of December of last year at 45.49. Give it a chance. It might not have to get there. I'm going to draw in a trend line. Remember, a trend line is just the joining of 2 points. Hopefully it's more than 2, but sometimes 2 is good enough. I go to the outer points, but if I find that it's important for me to draw it using the body of a candle, I'll do that. For instance, I could do this right now, but that doesn't make any sense to me. That's the one that makes the most sense. And there again, 46.32 to 45.50 and 46.03 is the 200-period exponential moving average. Give it a chance. If it does, it could have a nice bounce. I would only call it a bounce, and I'd even draw it in right here. There's a chance that it could do this. It could make another little pattern, maybe not going so high, but coming down a little bit lower. And it's just bouncing. Think of it. I always put this in the connotation of theory that I can understand. Think of a tennis ball. If you bounce a tennis ball, if you let the tennis ball go on grass, it'll bounce, but it won't bounce very high. If you take the tennis ball on a hard court, it'll bounce, and it'll bounce a lot higher. If you're on a cinder tennis court, or if you're on a clay court, what'll happen is you can drop the ball and it'll bounce in between the grass level bounce and the hard court or the concrete bounce. But if you take that ball and you throw it down sharply, it's going to go way higher than where your hand was when you let go of the ball. Why? Because it has such a velocity going down that the coil, the spring of the tension, as it gets squashed at the bottom when it hits the ground, explodes to the upside and with greater force. So look what happened. You've got this bounce, but it's a bounce with a plastic bag filled with water. It just barely did anything from the high of 56.04 back on the 14th of May, came all the way down to 47.40. Rallied to 50.63. Hey, nice percentage, but when you look at it, that wasn't even a third. It's just pathetic. So you've got to be very careful. So be careful on FNV. It's the same thing that we're looking at in many of the commodities. I'd hold off, and then I'd treat it only as a trade. In fact, you could even, no, I wouldn't. I was going to say you could even put a buy in at 46.20 with a 45.80 stop. I would rather wait. Let's just see how it handles that area. Okay, next question I had was CDK. Now, I don't think I've ever looked at CDK. CDK is CDX Global Inc. I'm not sure if it's a global fund of sorts of whatever, but it's gone to EF. Oh, wait a minute. So that is a double top, 49.40. Oh, there it is. You know, in the Chapman wave, if you don't scrutinize your charts, your only obligation is to make sure that you identify correctly each successively higher peak. This is the Chapman wave is the waveform that never sleeps, and every single little nuance is calculated. And there it is. That little bounce there, that was a 0.01 lower. That makes a peak. That goes to B. And I was looking at it, and it looked to me like everything here had the potential for a leg D that might go to a peak D. But this is an IPO. CDK Global provides integrated computing solutions to nearly 26,500 auto, truck, motorcycle, marine, and recreational vehicle dealers throughout the United States. Hey, thank you, Jane the Den. And it's an IPO that came out, went down to the 25 level, spiked up to the mid-50s, and now is trading at 55.64. That last spike was a peak D in the daily at 57.89, pulls back to the 9-period moving average. That black line holds. This is holding very nicely. And you know me, I grab the top, I grab the most recent low, and I say, there's your rectangle formation. A break under 59, underneath 59.50 says you've got to expand that rectangle. But for now, it could have a little mini 120-minute chart, A, B, C. It's already a peak, a mini buy mode that goes A, B, C, D to the upside, and then you've got to be careful. So it's looking good. I would just say be real careful if you're along this particular position. Some part of it should have at least some kind of a stop on a portion if it takes out 53. Why? Because it could go all the way to 51 to 50.50 before it actually stabilizes again. But in the meantime, have a trading stop on a portion, and if it gets to 55.60, if it gets to 56.80 by Friday or Monday, up towards 55, did I say that? 56? I mean, 55.80 to 56.30, just raise your stop and try to squeeze as much as you can, but I would take some part of it off because it's looking fabulous. I don't want you to do anything to it. You don't even have to take it off. You could just put a stop on some of it at 53. But I think if it starts to pull back in this market environment and closes under 52.50 at any point in the next 2 weeks, it says, hey, for now this is over. I need a bit of a rest before I start legs C and D in the monthly charts. It looks really good looking out, but shorter term, I think it's getting a little toppy. But I would not do anything maybe until I can squeeze a little bit more out on the upside or tighten up a stop on a portion. Keep your core position, but looking out, it must, I don't know where you got in, but if you got in, if it takes out 50.34 low, that's not good. Okay, so that's that. There was another one. Oh, IBB, which is the NASDAQ iShares, which my subscribers, we're short this via two methods. I had an alternate wave count. This gets a little complicated to do now. Maybe Friday I'll do it in the tech out in my show, which is usually I call it more technically oriented towards understanding the Chapman wave methodology. But there's a technique I call the Chapman wave unconventional instant restart. A lot of words, but it actually explains exactly what is happening. And what is happening is that this is really a peak B. But if you use my methodology, it is really a peak D, which alerts you to the fact that the IBB, which has been one of the most outstanding winners, the IBB has rewarded fund managers, individuals, and hedge funds within an hour or two of any pullback for the last 3 years at least, 2 years at least, but probably 3 years. And as a result, it's really hard to break the habit. And we're seeing now over the last 2 days whether or not that habit is going to pay rewards. I think that is changing. I believe in my work that the 120-minute chart has given me a sell signal, which at this particular point on this bar, if this bar closes where it is right now, 376, the IBB, iShares, NASDAQ, ETF, biotechnology ETF, trading at 376.11, down $1.48. If it trades here and cannot have a strong bar above 378.90 in the next two bars, that's two 120-minute bars, that's going to suggest to me we've got a sell mode in the 120-minute chart. I've not yet even got a sell signal in the daily chart, which says vulnerable to a spike to the upside above 385.02, which would reignite the whole concept of the unconventional instant restart and say, hey, you can now go to an E, which would be a C in the regular count, which means that you could even go to D, which means you could go higher. I'm anticipating, based on my analysis of that and the XBI, which is the broader, the spider biotech, which made a peak D in the 120-minute chart, a peak D in the daily, and it was a confirmation for me. But here's a leg F. I'm calling it leg F at this particular point in the weekly chart. D is where you got to be careful. E is where you got to, the yellow light's on. And a peak F is, if it is a peak F, you've got to be really careful. So this is the moment to be the most careful. If you are in biotechs, I would suggest just raise a stop on a portion of your position because you've always been rewarded for holding it. I don't want to be the one to change that thinking. I want to be the one that says to you, if you're doing critical analysis, there's something that's happening now in the biotechs besides the fact that there's an absolute total bubble. I spoke to someone in the biotech area who just knows it backwards and forwards last week, and we were talking about it, and I said, I think there's a bubble in real estate in the biotech area of Kendall Square and Cambridge and other areas where the Boston area has become the hub for the world in biotech, and there's been a fight to get decent quarters, offices. And as such, I think that biotech's going to be impacted by the next thing that comes along that the FDA starts to discuss if it has any negative connotation, but together with the real estate bubble and the level of payment that is going to not just CEOs, but to people that they employ in the biotech industry, which I wouldn't be surprised in the Boston area if it's at one of the highest levels ever. My suggestion is just be a little bit careful here, because the FDA is starting to make decisions on very extraordinary drugs, magnificent drugs. I mean, the area is just rife with, it represents the 21st century to a T, modern technology, specificity, doing everything, except that specificity is costing it, because the FDA is saying, hey, the costs of $80,000 or whatever, you can make up the numbers, it's just too great. And therefore, we are saying that your drug might be great, but it's great for only X number of people. Then comes along ESRX. This is Express Scripts, making a peak D in the daily, but still holding well. Leg D in the weekly, and leg F in the monthly. Along comes Express Scripts and says, hey, wait a minute, guys. We're not prepared to pay for you to give it to everybody. It's going to have specificity. And we're only going to be paying what we think. I think that's a change that is significant. And therefore, I feel a lot more comfortable this time. Shorty, we've had some fabulous, we've got the October turn, we've got some fabulous turns. Haven't always gotten out in time, because I thought that was the turn. Then the IBB would just turn around. Even this last big spike up with BIB, Biogen IDEC, just recently, it's an A, B, it's holding, well, I can even call that an E. But it made its top at 480.18 and it's trading at 413.42, up 277. But it looks to me like it's struggling. So when you get your leaders in the sector starting to struggle, I would suggest to you, this is the one to keep your eye on. Okay, so the question was, in the den, who was it? Was it Danny? The question was IBB. Oh, Mike. Mike said, Basil, I'm short IBB through the BIS at around 27. What are your thoughts? I've gone through my thoughts. Now let's go through specificity. Basil Chapman sitting for the one and only Tom O'Brien. I'll be right back. This is the Money Show. And I will be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
AB trading at 376.71, down 88 cents. 379 to 381, very strong resistance. Could even go to 382.50, but that's the area that should make another H pattern if there is a bounce. But if the IBB starts to trade between 375 to 372 at any point between now and Monday afternoon, that's going to suggest speed as well as momentum to the downside is unfolding. It'll take the MACD and the daily, which is very positive right now, negative probably underneath the green line below the red line. That's that right there. This is the daily chart. And get the stochastic at 87%, under 80%. And there's a pattern that I call the Eiffel Tower, where the price goes straight up and straight down, and the big test comes at about the 50 to 66 decline level, 60% decline level. We're going to be watching that real closely. Most importantly is, how does the weekly chart act next week? If there is no new high above 385.02, that's a start to say maybe we'll start to get a sell signal in the weekly. We haven't got anything in the weekly. Everything's positive except the MACD could deflect low, which I think it will do. Stochastic's at 83%, and I think is going to go below 80% by Friday a week. That's my thinking. But we prepared for that, and we've got fairly tight stops, so I'm not messing around. Just real quickly, let's go to the BIS. The BIS is the 200% ultra short pro shares, Nasdaq Biotech, trading at 27.65. I like the action right now if you're long this, and I consider that the weekly has got a rogue wave to the downside, or right shoulder extension upside down to the downside, and it's saying to me that in the 120-minute chart at 27.65. If it can get to the 28.20 to the 28.45 level by this time tomorrow, that'll be very important. Suggest that you're going to have a V shape, the opposite of the uppercase A pattern. This would be a V shape pattern, and that's what you'd be looking at. Make it real simple. I would give it a stop. The low is 26.53. Personally, I don't want to even go there. If it pulls back to the 27. We are long this at 27.34. It's at 27.65 right now. I want to see it push over the 9-period moving average of 27.98. I want to see it at 28.20, as I say, by this time tomorrow. If it does pull back, I'll make a decision on based on other things. But right now, the stop that we have for our subscribers is a little bit under 27. So you're going to make a decision about that, how much you want to risk. But if you're in really at close to the bottom at 27, 26.53 is the low. And I would suggest to you that if you were holding the BIS, even though there's deterioration a little bit every day, that you will get your price at some point, even if it goes lower. You will get the 27s. So I don't know how you want to think about it, but those are I would treat the IBB as the factor in what I'm doing. So I hope that helps. Now, real quickly, let me just say the VIX index, I'll do more of this in my show coming up right now. VIX index is pulled back. It's now only up, no, it's down 0.08 to 1318. Had a very nice early session. If you are bearish to the market, you want to see the volatility index very quickly. I mean by Friday or Monday at the latest, not take out 1193, the low that was made 3 days ago, but instead do the opposite. You want to see the weekly chart closing above the 9-period exponential moving average, which is done for 1, 2, 3, 4, for 4 out of, this will be the 6th week. So you want to either see the 6th week above, even if it's a tad above, at 1382 or higher, for there to be a cup formation forming in the VIX index, which would be bearish in the market and bullish on the VIX. So I'll be back. Thank you for being here. I do appreciate it. Check my opening call newsletter out. You can go to the front page of TFNN. See you in a few minutes. Otherwise, I'll see you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.